Hello and good morning, everyone. Welcome back to Almus Market Mornings, your daily dose of global financial updates with me, Swaraj. The word of the game is intervention, and the players are central banks. It is when central banks use their forward books, reserves, or even speech to curb excessive speculation related to positioning in the market. Our governor, Mr. Das, has said it many times: the use of our reserves, which serve as an umbrella during a rainy day. It's not just India, but various countries. We had verbal intervention from BOJ as the yen trades at critical levels, as well as warnings from the PBOC, including a suspected intervention which led to some correction in the Chinese yuan. JK, I would like to know your thoughts. Combined intervention by central banks, but it seems dollar strength is still persisting against the majors. What do you think?
Good morning, Swaraj. Yes, dollar is still relatively strong, and that's definitely driven by the outperformance of the US economy related to other countries, and also the higher yields that the dollar is offering to the investors. But then we seem to be at a level where investors are trying to assess whether the pricing of the dollar is appropriate at current level, because we are probably on the cusp of slowdown in the US economy as well, and that will probably change the trajectory for the dollar. Of course, yesterday ISU said that there were at least two central banks who were trying to job on the market into strengthening their currency. Japan, it was first who saw their the head of central bank talking about possible change to their policy at the end of the year when they will have more data on that, and that was taken as an indication that there might be a change somewhere down the line, if not immediately. But more importantly, it looks like BOJ does not want to waste their ammunition of forex reserves by selling only, and wanted to change the one-way mindset of the market, and we did have some impact on that. We had traded as high as 147.80 last week, and yesterday we came down to almost 146, and of course we have seen a bounce since then. But then they have put a lot of doubts in the minds of the market, about taking the dollar one way up. And then we also had the Chinese central bank, which announced that they would be indirectly, they indicated that they would be scrutinizing the large lot forex deals, which particularly in order to curb the speculative intent of the market players, and that put some pressure on the dollar. And we saw the Chinese yuan drop from 7.36 to 7.29 at one point of time. Now since then it has been trading between 29 and 31, but there was also some help from the Chinese loan data, which seems to have been on the better side of the expectations. So Chinese one had a good day, a relatively good day, and this was the two central banks which are actually managed to get the dollar down against their respective currencies. Then of course we had more central banks speak, like Bank of England. The MPC member Mann said that I would rather err on the side of over tightening, and also if I am wrong, inflation and economy drop more significantly, I will not hesitate to cut rates also. So basically they are keeping the market on a balanced side, and indicating that the policy could either go either way depending on how the data comes. So it's a data dependent approach which continues with UK as well. But there was a very underwhelming news from the ECB. There's a report that says that the Germany's stop-start economic motor is probably going on the reverse gear once again, and GDP likely to decline in the current quarter, and the underperformance of the German economy is probably going to impact the overall growth of the euro area as well. So that's the indication from the report published by the European authorities. So on the currencies, yes, as I said, Chinese yuan was a big mover, boosted by the combination of PBOC initiatives and also the better than expected Chinese data. And on the other currencies, we had euro, multiple attempts to break 1.07, not successful, and we had bounced to 1.0750. Since then we are trading in a very narrow range. GBP got a boost initially from Mann's comments, but then they are unable to decide whether how it will go a bit, because a lot depends on the data as well. Australian dollar and the other commodity currencies got a boost because of the yuan strength. Now on the stock market, big tech has led the gains in US equities once again. Nasdaq, rallying 1.14%, and this time it was led by Tesla, gaining almost 10% following an upgrade by one of the big investment company. Apple also had a recovery after seeing a big fall in the last few days. On the data side, New York Fed survey of consumer expectation showed an uptick in consumer inflation expectations for 1 and 5 year ahead, and that was slightly not well taken by the market. So we did have 10-year and 30-year yields inch up by 3 and 4 bps respectively, but not a very big influence on the market. In fact, while we had speaking from the many of the other central bankers in Fed, we didn't have any speakers because we are in the blackout period. September 20th is the FOMC meeting, and therefore we have a tradition whereby none of the Fed members are allowed to speak on the policy ahead of the meeting. Then market, of course, is waiting for key data on the retail inflation and the retail sales from US this week, although Indian inflation data will also be out today. Now, the US inflation is expected to inch up on a headline. Core is expected to come down slightly, so it's a kind of mixed kind of data, but definitely core falls that can be taken as a positive sign for the risk and also for the policy to continue with this status quo. But there can be a slump in the retail sales because auto sales are already indicating a big fall. Therefore, the headline and a headline number is going to be down. But if even X sort of shows a decline, that means that the US consumer is definitely on the slowing side. And yesterday we had also already shared the fact that the US consumer credit is coming down and people are finding it difficult to raise credit. Now back to Indian market. Indian rupee, of course, we did see shift to the lower side after the intervention by central bank on Friday, but there were very eager buyers at below 82.90, and saw the rate being pushed all the way up to 83.03. A lot of outflows being talked about. So I think right now people are not really taking any big view on the INR, and it's really moving with some flows and any excesses being curbed by the central bank action. But the main feature of the yesterday's markets in India was Nifty touching 20,000 historic mark, and that was emerging as a fallout of the G20 meeting, where India had a triumph as a diplomacy in the global scenario, inclusion of African Union in G20, which India pushed for, and also the India, Middle East, Europe corridor of transportation, which had positive economic and market connotations. And there was also news about government exploring listing of Indian firms on the London Stock Exchange. And of course, these good news did not translate itself into rupee following its own pattern, particularly, and which is par for the course because it's always moving with the flows, not really going with the headline news. And so that's about overall Indian market. But there seems to be, after hitting historic mark of 20,000 and some kind of euphoria overtaking the market, seems like large investors are cautious about serious profit taking, and we had one of the big banks announcing that they would stop and recommending fresh stock buys at these levels, particularly in the mid cap, etc. So we had a good run, and maybe time to pause ahead of the political events. Overall, very news driven market, and not so much in terms of the movement of the currencies, but definitely more economic events to follow will have the market moves much more. Thank you.
Thank you, JK. And it was the intervention season when it comes to the central bank activities, both Chinese central bank and the Japanese central bank being very active on the currency depreciation front. As per now, moving on to the European side, as per the ECB, Germany's economy likely to decline. That will put some more pressure on the overall euro area economy. UK central bank speaker, they mentioned that they'll take a data-driven approach. Commodity currencies performed well yesterday due to the strength in yuan. And when it comes to key data, Indian inflation numbers due today, And this week we have got investors waiting for the US retail sales as well as the inflation data, which will provide some direction for the dollar. There is a possible slump in retail sales as indicated by the fall in auto sales, so that will be something interesting to watch. For the rupee, the shift is on the lower side, but we observed yesterday there were buyers below 82.90. And when it comes to stock market, Nifty touched 20,000 historic mark. So that's really a significant milestone for the index. That's it from us today. Thanks for listening, and do tune in today for a webinar on the Chinese economic slowdown between 5 p.m. to 6 p.m. Conducted by Mr. Maulik Shah, Mr. Matthew John, who is the director research here at Almus, and as a guest speaker, we have got Saugata Bhattacharya, who is the chief economist of Axis Bank. So do tune in today at between 5 to 6. The link will be in the description. Thanks for listening.